Today in shambles, disbelief, it's over. Bro, you haven't lived one day until you've received a liquidation email. How are you even a man? You haven't lived till you fought BitBoy at Karate Combat 48. Let's go. This video's an homage to all my liquidation email receivers. Top of the day, top of the day. I'm going to try to bring this all together. This is kind of like my trading style in one video. I'm going to try to not make it as dry as the other ones. They're usually pretty dry, but let's see. Okay, Avax. So this to me is an A+ setup. It has basically every property I look for in that A+ setup. Here's your weekly dealing range. Now, dealing range is defined by a significant high being taken out. That's your swing high, and significant low. This is a perp chart, so you don't see the low that got taken out here, but you could see it on spot Binance. So these lows got taken out there. So that's going to define the bottom of the dealing range, that low that took out the significant low. Within that, typically the way liquidity flows, it's going to be targeting above equilibrium in the dealing range. So it's usually going to be looking for an imbalance or a significant high that forms in the premium of the range, which we got right here. So that high got rated here inside of premium. So that was your external raid. You guys have heard me talk about this before, where typically after taking that high, price is then going to look for rebalancing the obvious weekly imbalance. Now, if it has lows above it, slightly above it, then that becomes an even stronger draw. So now your draw is into here. And what you're looking for is this range to get completely rebalanced. So here you can see price goes in, and then it forms a low, doesn't completely rebalance the range, but it does rebalance a significant portion of it. So what you then have in the range here is, if you zoom out, these last two down candles that rebalanced this candle right here and rated this internal range before pushing up, that was your order block. So people entering here below this are entering an inducement setup. So we'll define the order block right here. This low slightly above the order block, that's your inducement. It's engineering liquidity for a push down into resting bids, and they're hopefully going to get filled and then push higher if that's the bottom, right? So that's your inducement setup, and you can see we tag it after taking that liquidity, and then from here is a little bit of a push up. There's your push up. It's like 40%. So let's say you got in right here, 45%. Now, order block traders, what they normally do, or they're trained to do, is basically if they enter on the order block, whether it's the top, the middle, the bottom, doesn't matter where, they're all trained to put their stop right below the order block low right here. So this low that formed before displacing higher. So one of the trades that I use, I mean, we already looked at inducement here, but the other trade that I really look for is the order block stops to get ran. So in a pullback, if this is bullish, any order block that formed on this side of the curve should get respected and support price higher. But if it doesn't, then it targets this low, it's probably going to target these lows right here. So you have 1, 2, 3 ascending higher lows, and then your order block stops. So this is the premium setup. This would be like my A+. Okay, so there it is. And ideally, when this low forms, to know that this is manipulation, I'll usually pull up the awesome oscillator and RSI and look for some divergence, which you could see from this to this to this. Those are all lower lows. From here to here, slightly higher high. Sorry, slightly higher low. So the RSI is confirming Class A bullish divergence, and awesome oscillator, same thing, except you have 3 in a row. So it's showing that the selling momentum is fading and that buyers are starting to come in. So they targeted the order block stops right here. That's your high resistance liquidity run. So it's basically a liquidity raid against order flow, and then you're looking for a reversal coming off of that. And I'll show you an example of that in a moment. But after this, what I'm trying to do, basically now that the whole range got punished and pretty much everyone who was long on the front side over here got taken out, I want to see between the swing high and swing low within the daily dealing range, does it form structure? So right here, you can see that's your original consolidation. You have another consolidation here before big breach, and then it forms another range, breach, and another range, finally taking out the order block stops. So that's the structure I'm trading. And you can see this is your MMXM. So this was the sell side of the curve, and what you're trying to trade is the buy side of the curve into this high right here. So moving on, you could see a bit of a shift here in the range and a pullback into this order block. That's your low risk buy. So as long as, you know, if it wicks into here and then it keeps closing above, that's a pretty good sign of strength. And you can see it then basically shifts again above that high. Now you have a confirmed shift in order flow above that high. So what you're expecting with MMXMs, once the buy side is confirmed with that low risk buy, you're looking for a new accumulation range to form here. So here's our accumulation range. Where I want to get in on the trade is now that we've confirmed buy side of the curve and we're targeting much higher, I want to see an engineered lows in the range, which you can kind of see here between these. This is a perp chart, right, on buy bids. So this actually looks like it took out that low, which it did. But if you go into the spot chart, you can see on spot Nance, it didn't take out that low. So I usually use, even though I trade off perp, I'm using the spot chart as a proxy for where the next move is going to happen. And you could see right here, it's likely to flush this range before moving up. I treat this low as a protected low because it took out this internal range and tagged basically half of this daily imbalance. So I believe that's a protected low. It's also from this low to that one, it's about 5%. So it could drop a little bit lower, but for the most part, I believe they're just going to grab these lows and continue the move. And that would be your continuation purge. So here's the actual setup in the range that I'm looking to trade. Let me just black all these out. So here's the setup. If I drop it into the 8-hour, I'm basically cycling between time frames to see which one has a clear, obvious order block. And what you'll find in this one on the 8-hour, you basically have this drop right here that took out the internal range into a previous order block. So between the two, you have a propulsion block. But this is the untested one that led to displacement above this high. Now it looks like they're engineering liquidity right above it. So this is that inducement setup that I like trading. This is an A+ setup where basically you're gonna have a passive bid or resting orders waiting below here. So resting bids, and you have engineered liquidity slightly above. Now notice I have 3 bids here. This is not like with size. This is just basically like a starter position. 35 to 50% of my position allocation is going to be in these 3 bids. And the way I structure it is one above the order block, but below these lows. So that's going to be the lightest of the 3 bids. Then there's going to be one around the middle of the order block, slightly above it, just to front run anyone else who's trading the mid. And then one, which is going to be the highest of the 3 bids in terms of size, below the order block stops right here. So in case they want to be cheeky here and drop it below the order block stops, I have exposure to that. And because it has another order block below it, that only filled half, there's likely going to be resting bids waiting here too. So I feel like this is a protected position, meaning there's no like gaping imbalance, very obvious imbalance below that it could drop below. And I'm trading more or less with the resting bids that are going to be in the range. So that's going to be my third bid. Below that, I want to have a stop just because even if it comes below these order block stops, maybe it rebalances here, but below that, I don't want any exposure because then you have these equal lows, you have a pool here, and then it could probably breach much lower below 20. So you have to have a stop. Now in this range, the way I'm structuring it is if I have, let's say, 50% of my allocation within these three bids, what I want to see is a purge. So it's considered a continuation purge because we know on the high time frame, we're trading that market maker model to go much higher. So the idea is this is just an accumulation range where they're going to likely take out everyone who traded the front side with a continuation of the move up, which should be on the buy side of the curve. Now in this range, I still have 50% I haven't allocated, right? So the way I structure it usually, if there's an up candle on higher time frame, like 2 hour, 4 hour, 8 hour, 12 hour, and they do something here where they stop volume, they push up a bit to bait more people, but just rebalance that drop candle here, then that's going to be the bearish order block that sends it into my target or my POI here. And what I want to see is that up candle that baits everyone, all the front side traders, is going to end up being a breaker. So this is what I would want to see. Basically a quick move up, baiting some more longs in the range, and then a flush of those three equal lows. Then some sort of shift in character over here, changing character, and then a shift over the high that was that bearish order block, and that's what would confirm the breaker. Then any pullback into the top half of that block right here, that's going to be your sweet spot to basically enter the rest of your position. So basically 50% will be entered here in those, and again the size increases with each bid lower. So the first one is going to be light, but on this one we've already got a confirmed raid and shift above the breaker. So I would add the rest, the other 50%, because then by then we'll have a low end. So it might not be down here. This is just for exposure. And then what I would do is lower my risk by bringing it up to here. So now I'm only risking 4.77%, not 8.53% drop. And that allows me to actually add size. So even though I had 50% here, 50 here, because I'm bringing my risk back, like my risk on this trade is now decreased by half, I can actually add another 20-25% over here once the order flow is confirmed on like the 4 hour, 8 hour time frame. Now what does that look like? So here's a very good example. Basically, I'm not going to walk through the entire example. It'd be very dry, like if I did it in real time, but I do that usually on Discords. In this case, you had equal highs over here, you had equal lows right here, and then you had a daily close below it. If it was just a wick and it got absorbed and we closed back above this low, then that would be a swing failure pattern and you would trade the range back to the range high. But because it closed below, it was signaling to markets that it was going to target lower, potentially these two lows, or at the very minimum this wick, fill or maybe take the low here. Then you could see the following series of candles. There was no close below that low. It kept getting absorbed here. So that was your high resistance liquidity run. And I'm looking for that to happen somewhere over here too, where basically it wicks into here, gets absorbed, keeps pushing in, but keeps getting that resting bid, keeps coming in, and basically we don't close below that order block. If we get that, then I'd look for something like this where the trend continues. So again, this is already an uptrend. That was a high resistance liquidity run against the order flow. And then it continues to push up, shifting here. And then in this range, shifting above this high right here. This was your final up candle that led to the raid in the range, which also rebalanced on the daily up to that lower imbalance right here. And then after the shift, you're basically waiting for it to close with strength above that final up candle. When it pulls back, you long the breaker and you target the equal highs, which are the drawn liquidity. So this is the same type of setup I'm trying to trade on Avax, where I'm targeting not just these highs, so this liquidity arc, but also this high, all the way into the final target, which is the daily original consolidation. So this is an example of a perfect A+ trade. It's basically an inducement setup into the order block. The last variable that makes it even stronger is once you have a defined range, which Avax does, I'll take from relatively equal highs where the range began. So like right after this drop candle that breached these lows, you develop a range. And this is your 8-hour range. So I'm looking at the value area high, the point of control, and the value area low. The value area low was a pivot right here, and it was a pivot right here where that 8-hour order block formed. So combining the two, you basically have potential resting bids here in that order block. It's untested. You have liquidity above it, and you have a value area low, which is suggesting there's going to be volume traded in the range here. This just basically amplifies the trade setup. So I'm looking to trade this. This is going to be a continuation purge in the range. And then we're trading the entire buy side of the curve now that we've confirmed a shift in order flow in the range. All right, that's Avax. Have a good one, traders.